Hi, good afternoon, everybody. A warm welcome to our webinar this afternoon on the topic of the Thai hotel industry, challenges, investments, and M&A opportunities. My name's Matt Crane. I'm a director at KPMG in Thailand, and I lead our value creation and restructuring services. And I'm delighted to be joined by two of our senior partners, Ian Thornhill and Kun Bunyapon. Maybe I'll hand over to them for a brief introduction, maybe starting with Ian.
Yeah, thank you, Matt, and good afternoon, everybody. My name is Ian Thornhill. I'm a partner with KPMG, and I lead the deal advisory practice with KPMG in Thailand. I've been in Thailand for over 12 years now, helping advise multinationals and local businesses in executing M&A transactions, either locally or outbound. And looking forward to sharing some experiences with you about the hotel sector in this call today.
Thank you. Hello, everyone. My name is Bunyapon. I'm a legal partner at KPMG Law. I have 17 years of experience in the area of M&A and capital markets. So I'm very happy to be here today.
Thank you, Ian and Kun Bunyapon. So if we move on to the agenda for today's session for the next hour. So we'll start with a very brief introduction into a topic that I think has been widely discussed for the last 18 months across Thailand. And then we're going to talk about the impact of COVID-19 on the Thai hotel sector. But really, we're going to quickly start focusing on what that's meant for M&A trends, where Ian will share some of his experiences over the past 18 months. And then we'll hand over to Kun Bunyapon to talk us through some of the implications and considerations for investors who may be looking to acquire or invest into hotels in Thailand. And then we'll close at the end with a Q&A session. So if you do have questions, please feel free to put those in the chat throughout the session. Our team will be logging those and recording them, and then we'll come back for the Q&A at the end. So I want to start with some high-level introduction into the impact of COVID-19 on the hotel sector. And one thing I want to say at the beginning here is that I think some of these statistics on the screen now, many of you will have seen before and will have been discussed at length on previous sessions or webinars. So I really will keep this first session light touch, and then, as I said, we'll really dig into the M&A impact and legal implications as well. But with that being said, I do think we need to talk about some of the key statistics we're seeing recently. Clearly, the number of foreign tourists visiting Thailand has plummeted dramatically. I think everyone knows now of the 40 million number in 2019. And now we're down to less than 100,000 in 21 today. Obviously, the hope is that with the country opening and relaxing quarantine measures from the 1st of November, those numbers will start to increase. But I think we'd all agree it's been a slow start, particularly with the likes of China still very much under restrictive measures with 3 weeks quarantine required for anyone returning to China. And then if we look at the bottom graph, average occupancy rate in Thailand, again, we wanted to draw attention to the 2019 numbers where occupancy was around 60–70%. So there was already a little bit of oversupply in the market. And now that has plummeted dramatically to 5% in Q3 in 2021. And then two measures, which for those of you familiar with this sector will be very familiar with, the average daily rate clearly down materially from pre-COVID levels, but more drastically, the revenue per available room, which is down almost 70% from pre-COVID levels. So that's some of the headlines that I think you're all probably familiar with. If we could move on to the next slide, please. So I now want to talk about the fact that we can't generalize in the hotel sector. There's lots of different types of hotels, different business models, which will have been impacted differently by COVID-19. And that's not only the five-star hotels versus maybe some of the family-run hostels and B&Bs. Clearly, they have had different experiences with the likes of the SHA scheme, generally being preferred by tourists for the high-end hotels. But other things to look at, the location. Many of our hotel owners in Thailand will not only own hotels in Thailand, but maybe in other countries. Clearly, there's going to be a very different implication for domestic versus international. Typology, is it a holiday destination such as Phuket, Samui? Clearly, they're experiencing very competitive price wars and obviously dramatically plummeting tourist figures. But then interestingly, in the business typology, there are hotels that would cater to business travelers around ASPAC, which was a big market. Now that has clearly ceased almost all to zero. And who knows when that will start to return, given companies have now learned to have meetings online, such as us at KPMG. And then the final part I wanted to talk about was the business model. Clearly, some hotels will own that hotel outright and manage them. Clearly, they may be the ones that have debt and in the need of cash flow. We then have lease agreements. There may be some short-term financing required, but quite likely they've been able to renegotiate some of those leases. And then we have management and franchise agreements, which again, different models. Maybe for franchise operators, they may have struggled to receive the franchise payments from their operators. So a few other considerations that I think it's important to note here. If we could move to the next slide, please. So again, something maybe you're all very familiar with, but we did want to touch on some of the government policies and support measures that have been provided. Now, there was a lot of talk early on about this sector in particular and how the government could support with specific measures. And I think it's fair to say that that's been done to some extent. Certainly with the demand stimulus, there's been a number of schemes over the past 12 months or so where the government has supported particularly domestic travelers and encouraging them to support local tourism through subsidizing whether it be flights or food and beverage or actually the hotel stay itself. And then we have the broader financial support measures, which I think most of us are probably familiar with now. We have the soft loan schemes, more recently the asset warehousing scheme, which was designed with certainly the real estate and hotel market in mind, where companies could exchange their assets to reduce their debt burdens. We've also got some tax support measures, so tax relief on the transfer of secured property. Again, our view is that was in mind of the hotel and real estate sector where transactions may needed to be made in order to support liquidity. And then we have some other maybe more operational liquidity support measures, such as electricity discounts for certain sectors, including hotels, and social security contribution reductions. So all of those support measures have been in place and reacted to the need for the hotel sector to survive. But maybe now I could come to you, Ian. I know you've worked on a number of transactions and with a number of clients on both the sell side and the buy side in this sector. Maybe you could talk us through what you've seen and heard in terms of how hotels have been reacting to the impact of COVID.
Sure, thank you, Matt. And I think, it's helpful to share that background and context, even though I think many of us are already sort of aware of the bigger picture. So I think now I'm just going to spend this section talking about the specific actions that hotels have taken throughout the last 18 to 20 months to largely focused on reducing cash burn during this difficult time. Look at some of the M&A trends in this sector, and specifically while we haven't seen that as many M&A deals as maybe we expected, and share some observations about some of the projects that we've worked on in the sector and what we're hearing from our discussions from both hotel owners and potential investors. So in terms of the measures that hotels have been implementing to cope with the challenges of the pandemic. Initially, the big question that they all faced was whether they should continue to stay open and continue operations. And this is what, for many, if not most of them, did at the beginning of the pandemic, when we optimistically thought that it would all be over within a few months. But as the pandemic progressed, then many eventually did close. And for those that did close, the obvious short-term impact is that it was a way to quickly reduce cash outflows and stop the bleeding to some extent. but they're still left with some fixed costs. And importantly, with the hotel being closed, then there is completely zero income. But more importantly, whilst closing the hotel could be done relatively quickly, it is not so easy to reopen again quite as quickly. And this has been a great challenge, especially during the volatility of the different waves, the rapid changes and unpredictability of government restrictions, etc. And another option that some hotels chose was to pivot towards the ASQ quarantine hotels and hospitals. And I know several hotel owners that did this quite successfully with good levels of occupancy. But the challenge remains how to emerge from those schemes and pivot back towards the normal hotel tourism business once things open up again. The next point is around workforce reduction and employee costs. And this is obviously one of the key variable costs of a hotel business, and costs here have been reduced in a number of ways. Redundancies, reduced hours, pay cuts, etc. And there are a number of potential legal considerations regarding this, which Kun Bunyapon will describe in more detail. But a key challenge on the operational side of this is once you've reduced the employee costs, it's how and when to rehire and retrain the quality staff in order to reopen. And this is especially so and especially challenging at the luxury end of the market in hotels which pride themselves on the quality of the customer experience and the services that they deliver. In terms of general costs, as with any business, costs have been cut or deferred where possible. But these are only temporary measures to a large extent. And when it comes to bricks and mortar businesses like hotels, there's always a balance that needs to be struck between deferring maintenance, capex, upgrades, refreshes, etc., in order to protect cash flows and maintaining the quality and position of the asset for when things open. And actually, some bold owners have taken the opportunity during the closures to actually invest and upgrade their facilities during this time. But the conclusion here is that whilst measures have been effective to reduce cash flows, most of these are short-term fixes or deferrals of expenditure. And it's clear that as we go into 2022, cash and financing needs will both increase. So just to move on to the next slide. So I want to touch briefly on this before we go into some of the specific M&A observations. So over the medium to longer term, as tourism reopens, there are several of these considerations which hotels need to address. Firstly, there's an acceleration towards digital marketing, but along with that, there's also the question around what is the strategy on pricing as things reopen, and what is it longer term? Should hotels be offering special offers, discounts, packages to be more attractive to the lower number of tourists? And if so, how will they then be able to get the pricing back up to the pre-COVID levels and where they see, especially on the premium and luxury end of the market? There's also cost and administrative challenges to ensure hotels are COVID safe, dealing with the regulations, etc. But I think more importantly here, looking at the medium term, short to medium term initially is what investment is needed to reopen and service guests again. And we mentioned before the need for catch up on maintenance and capex costs. There's also costs of hiring, retraining, deep cleaning, servicing key equipment such as air cons, pumps, etc. All in the relatively short term, but then upgrading and potential repositioning of the hotel in the longer term. And this is part of a bigger question around consumer trends and potential changes in consumer base. And I'm sure every hotel owner and hotel manager in Thailand and probably around the world, but especially here, will have asked these questions. Will the customer base ever be the same as it was pre-COVID? I think especially in Thailand when we're expecting to see, or when we're not expecting to see anything like the tourism numbers, arrival numbers in the next few years that we saw in 2018 and 2019. And going along with that, then, does it make sense to pivot towards new trends such as wellness as a way to kind of reposition and attract the new market. Workations, staycations, there's different types of customer which may be attracted by different propositions. But the consistent theme of all of these points is that they need investment. Not only will the hotels in the next year need to start repaying the interest and capital on the loans that have been put on hold since 2020, they will also need to continue to invest more in the recovery. So the question around the capital structure and how to fund that recovery becomes more the focus. There's a few options here. So obviously, there's a need for debt restructuring and or refinancing of the existing debt. And although banks have been supportive so far, it's unlikely that they will be keen to increase their exposures and fund the recovery into next year. Another option is full or partial divestment. But I think what we're likely to see, the majority of cases into next year, are owners seeking a joint venture or strategic partners who can invest in the hotel and help to restructure the existing debt, but also provide for funding for the operations and expansion going forwards. And these can be either financial investors or hotel groups, which I'll touch on a bit later on.
So Ian, if I could jump in there, I think some really interesting facts and observations to share with our audience. But as 18 months ago, so as you and I and Bunyapon and many of our peers in the advisory network would have expected a lot of M&A activity, a lot of restructurings, a lot of rehabilitations in the last 18 months. But I think it's fair to say we've not really seen that. Maybe you can share with us your views on why that is, that we've not seen that volume that we were all expected.
Sure, I think, and that's a very good question that many people, including ourselves, have been asking over the last 18 months or so. Given all of the financial challenges that hotels have faced, why have we not seen more M&A activity in the sector? I think if you just move on to the next slide. So I think the answer to this question is, I think in our view, there are three key reasons. The first is that the banks have been supporting. So as in many countries, hotels clearly in distress. But so far in Thailand, there's not yet been an acute liquidity crisis because the banks have been supporting the borrowers. Secondly is a key point, which is a valuation gap, a large gap in the expectations between the owners and the investors' valuation. And the third point is general uncertainty around how long COVID will be around, when the borders will reopen, and whether and when mass tourism would come back. And I'll go through each of these points in a bit more detail shortly, but I thought it'd be helpful first just to paint a picture of M&A sentiment in this sector throughout the pandemic so far by looking again at this chart showing the occupancy levels against COVID milestones in Thailand. I think if we go back to 2019, pre-COVID, when obviously tourism was booming, and during this period, hotel M&A and hotel investment was pretty much dominated by owner developers adding on additional hotel supply. And as Matt, as you mentioned at the beginning, there was already a sense of oversupply within most of the hotel markets within Thailand. But financial investors at this point were largely priced out because the owner developers were being quite aggressive. As we move into then to 2020, and especially by Q2, the impact of COVID is clear and occupancy levels dropped off a cliff. And given that really acute impact, which is stark when you see it on the graph there, this was a time when we were speaking with a lot of financial investors, particularly the distressed funds, who were looking for opportunities to pick up good assets at a low price. But despite having lots and lots of conversations, it was very difficult at that time to progress any deals because of the significant valuation gap between the owners and investors. And again, that was largely because banks were supporting hotels, providing payment holidays, etc. So therefore, the few hotel deals that did complete in 2020, I think were pretty much all actually commenced or agreed in 2019 prior to COVID, or certainly prior to the big impact of COVID in Thailand. excuse me. And then as we move forward into Q3 and Q4 2020, it looked like we would see more deals completing. We saw investors becoming a bit more bullish in terms of valuation, as it looked like COVID was under control in Thailand, and we were hopeful that borders would be open in time for a busy high season over New Year. And how naive that sentiment seems as we look back now. But that was what happened. And as we know, towards the end of 2020, there was a large wave of COVID which hit Thailand, and that effectively cancelled high season for that year. And many investors again got slightly cold feet, understandably became more conservative in terms of their valuation, as it became clear that COVID would be around for many more months, if not years. And so there was the prospect of having to fund extended periods of hotel closures, extended periods of losses, and that obviously changed the investment dynamic significantly. And it's worth noting as well, it was at this point that many of the hotels which had struggled to stay open during the pandemic so far finally decided to take the decision to close temporarily until the situation improved. So let me come back then to those three key themes which we see as being the key impediments to seeing a lot of actual completed deals in this sector so far. So firstly, the support from the banks. This is both sort of government and central bank, with some of the measures which Matt mentioned earlier, but also the commercial banks in general have been quite accommodative of businesses that have been impacted by the pandemic, offering payment holidays, restructuring of repayment timelines, etc., and generally less likely to call a default or seek to call foreclose on any of the properties. So therefore, although the hotels have clearly been in distress, without the need to repay these loans, there wasn't the acute liquidity or acute cash crisis that would force a deal. And secondly, on the valuation gap, so owners understandably don't want to sell too low and then watch someone else make a large profit on that asset within a few years. And I think here maybe some bad memories of the aftermath of the 1997 crisis, financial crisis in Thailand. And what we were seeing throughout, certainly throughout most of last year and still now, is owners still clinging on to the pre-COVID valuation back in the sort of 2019 record levels, whereas investors were speaking to understandably expecting significant discounts to that, maybe 30–40% plus, again due to the uncertainty and the long recovery time. But coming back to the first point, as long as the banks are supporting the hotels and the owners are not forced to repay existing loans, there's no significant pressure on them to accept what they perceive as potentially lowball offers. And then that brings us to the third point, which is uncertainty. And this is more from the investor perspective. More uncertainty equals higher risk and therefore lower valuation. Especially with the realization from the end of 2020 that travel would not come back very quickly in the short term. It wouldn't go back to normal by the beginning of this year. And it would be at least several months of losses and closure that would need to be funded, as well as debt repayments, expansion, normal operations, etc. So that uncertainty just increased the difficulty in getting deals over the line. But then coming back to the chart, and as we enter the end of 2021 and looking forward into next year, where does that leave us now? So I think with global travel getting going again, fewer restrictions in getting into Thailand, we're again seeing investors being more bullish on the valuation. And at the same time, after almost 2 years of distress, banks will be starting to put some pressure on businesses to commit to a repayment plan. So owners, I think, will come under more pressure in the shorter term to negotiate on valuation, and that valuation gap, I think, should reduce from both sides, which will lead to more deals next year. And one thing that we do expect to see, as we do expect more deals next year, are more exotic deal structures. And again, in order to really help narrow that valuation gap and address that uncertainty. I think this is going to be especially the case for financial investors. We'll see more contingent or variable M&A structures, for example, The initial valuation may be lower, but the investor may be willing to share more of the potential upside on an exit with the owner once they've already made their target returns, or even just more straightforward earn-out structures where a portion of the valuation is held back to be paid in 1, 2, or even 3 years down the line, based on the hotel meeting the projected profit levels that the owners have shared. So I think just move on to the next slide, Matt. Then I just want to go through, as we're talking about the types of investment, I thought it's helpful to share a little bit about the types of investors that we're speaking to and that we expect to be active in this sector next year. And I think we split them into 2 broad groups: the financial investors and the strategic investors. And on the financial side, we're talking generally about private equity funds, asset management companies, sovereign wealth funds, family offices, etc. And these are, again, 2 quite distinct types within there. One of them is what we're calling growth funds. So these are funds that have, even pre-COVID, a strategic focus on hospitality. So they raised funds before COVID even really had such an impact, and set up a platform to invest in this sector. Now, these are typically more risk averse, as they don't normally focus on distressed investments, but therefore looking at good underlying assets that may complement existing hotels or other groups within their portfolio. I think the second financial investor type are distressed funds and asset managers. And here these naturally have a higher risk appetite, therefore high return expectations. They're more comfortable in investing in complex, messy assets which need complicated restructuring. And obviously for this type of investor, the valuation is key, with the expectation of lower initial investment values reflecting the level of distress and the level of risk that they're taking on. On the strategic side, this includes both local and multinational hotel groups, but also other conglomerates with real estate or hospitality interests. And these conglomerates especially often have strong balance sheets, and therefore open to an opportunity to acquire a trophy asset at a good valuation. Hotel groups more so looking for opportunities to add good quality properties or brands to their existing portfolios, again at attractive valuations given the current market. These types of investors also have a longer term and more strategic time horizon, without as much need for a quick payback as the financial investors. So I think just to summarize, if you go to the next slide, Matt, our views on the M&A outlook for the hotel industry into the next year in Thailand. We do expect a fairly active year and a mixture of both growth and distressed deals. Banks will need to start asking for repayment of loans, so hotels will need to raise cash from somewhere or find some financing from somewhere. The borders are opening, and that means firstly more tourists, which is good, but it also means importantly that those foreign investors, and especially those funds, can also more easily travel to Thailand, inspect the hotels, negotiate deals, and deal making will generally just become a lot easier. I think all of these dynamics mean that valuation gap will shrink, and therefore we'll see more deals. But it's important to touch on a point that Matt raised earlier as well, which is the outlook is different depending on the positioning. And I think and the luxury segment will likely do better in terms of occupancy, but with fewer tourists, they need to work out where they're going to play on pricing. But the lower and mid segment, I think that's likely to experience much more competition given the existing oversupply, and likely to see more distress. But either way, I think the conclusion is that 2022 will be an exciting year for hotel M&A in Thailand. So I'm happy to take any questions later, but Matt, hand back over to you for now.
Thank you very much, Ian. So I think just to pick up on Ian's summary there, we're hoping to see more activity next year in terms of M&A, and we already know there's investors who have previously looked in the last 18 months but not been able to quite close or execute, and we fully expect them to start coming back next year as some of these factors that Ian's just talked about start to come to fruition. So with that in mind, Kun Bunyapon, maybe a good segue into your section, where we're going to talk about some of the considerations that investors, both foreign and domestic, will need to consider. So over to you, Kun Bunyapon.
Thank you, Matt. Recently I've been asked by many foreigners or foreign investors on the structuring because they are looking into invest in the hotels in Thailand. So now we are grouping those issues into three different groups. The first one is the incentive for the foreign investor. So the foreign investor may look into invest into Thailand, but they are restricted by certain law in Thailand that they cannot operate hotel business, and foreigners in Thailand cannot own land or the company that are owned by 49% of more than 49% of foreigners cannot own land in Thailand. So they are restricted by this law. They are looking into find there are any incentive for foreigner to operate hotel business and own land in Thailand. That's the first section. The second section is the issues with regard to the due diligence on the hotel. What are the items or what are the legal issues that they have to look into when they are looking into acquiring hotels in Thailand? And the third one is on the employee management. This is a very important issue because during COVID time, there may be a lot of issues on the hotel has to close their business. They have to lay off their employees. They have to reduce their employees' working hour or employees' salary or compensation. So this would impact on the hotel, and these are legal compliance that they have to take into consideration. So the first one would be the incentive for the foreign investor. Actually, the BOI has incentive for investor to invest in hotel business in Thailand. There are two types of incentive. The first one is a non-tax incentive. Non-tax incentive allows the foreigner to use the land and then to bring in expat to come to work. Those are non-tax incentive. And the second one is the tax incentive. The tax incentive has the 3-year exemption on corporate income tax and the exemption on the import duties. But this would depend on the location of the hotels. If that hotels is located in the popular provinces such as Bangkok, Phuket, Chiang Mai, something like that, those do not have the tax incentive, but they can still have the non-tax incentive, meaning that if the hotel can get the BOI for those in those provinces, they can still use the land, they can still bring in the expat to work in that hotel. But again, although there are the incentive, there are also conditions for the foreigner. So not all of the applicant can obtain the BOI. There are certain qualifications that they have to qualify. Basically, let me say like this. Basically, this type of incentive are issue for construction of new hotels. So it means that they are looking into new investment for new hotels. But for old hotels, that is possible as well. But it has to be an new investment that is considered like a major renovation. Major renovation to the point that it is like building a new hotel. Meaning that if you have like an old structure, and then you do a major renovation, you build in certain construction, it just don't it's not like you are putting in the curtain or painting new paints. It cannot be like that. It has to be a major renovation and bringing in the new investment into the hotel. So as to be qualified for this BOI incentive. And there are and in those conditions, if the hotel has 100 guest room or more, there has to be a minimum investment of not less than 2 million baht per room. And if the hotel has less than 100 guest room, the new investment has to be must not be less than 500 million baht. So this does not include the cost of the land or the cost of the hotel. It has to be the add-on investment into that hotel to be able to qualify for this POI. So to us, maybe if the foreigner are looking into invest in the hotel, it may not be feasible, or it may be some certain difficulty in order to qualify to obtain this POI. So actually there can be another ways to do that. The first one is to restructure the acquiring entity to be the Thai entity to acquire that hotel. That the first structure that they can do. The second one is that the foreigner invests in that hotel or that company that hold the hotel right away, and then the hotel obtain the foreign business license in order to operate the hotel. But the land they can still they still cannot hold land, right? They have to carve out the land first and then lease back off the land. But again, for this structure, as we understand that the FBL are not from what we see from the precedent case, the FBL were only granted for the applicants who are Americans that are using the benefit of the Treaty of Amity, but not for other type of investors. So if the investors are not American using the Treaty of Amity, that has also difficulty, a certain level of difficulty into applying and obtaining the FBL. So basically the best option is to have the acquiring entity structured to be the Thai entity to acquire the hotel for operating the hotel in this case. Okay, and then for other issues that when the foreigner or when even the Thai investor are looking into acquire the hotel, there are many key issues that have to look into. The first one is the title of the land. In this case, I want to want you to take into account the title of the land and where the land is located. If the land is in like a very high risk area, for instance, if you see that the land is in the mountains or on the beach, then you may have to think whether those land are located in the forestry area or the national park area. Even if you have obtained the title deed, it doesn't mean that the title deed is issued legally. So basically, what you have to do is that you need to have your lawyer or your staff go into the local office of that local land office of that area and check manually whether that land title deed was issued legally. Because if that title deed or if that land is issued in the national park area or forestry area, there may be certain legal implication and prohibition for that land to be operated. And also you need to check whether there are any certain encumbrance on the land or on the hotel, whether there are any mortgage on that hotel as well. And then there are issues on checking whether that hotel has sufficient license or permit in order to continue to operate that hotel. Of course, the most important one is the hotel business operating license. There are 4 types of hotel business operating license. So that you need to check whether the target has the correct type of the business license. The second one is the foreign business license. Again, that I said earlier. We have not seen many foreigners, foreign hotel in Thailand that has obtained the foreign business license, unless they are the American who have obtained under the Treaty of Amity. So again, if those are the hotel that has a foreign owner, you may need to check whether they have sufficient foreign business license in this case. And also the typical construction permit and construction certificate. Those would be for the the proving or seeing who would own the building, the hotel building, and that would be benefit when you transfer the hotel building as well. And you need to also check on the EIA whether that hotel has submitted the correct on the EIA. And under the law, if the land has at least 80 guest room or 4,000 square meter usable area, those would be required to have the EIA. And if the foreigner would reapply or apply for the new BOI, the new EIA has to also be submitted. So if you the foreigner want to apply for the BOI and that hotel has at least 4,000 usable square meter or at least 80 guest room, then the EIA has to be obtained. And the next license would be the health hazardous business license. This kind of license, depending on the activity of that hotel that they have. For this, if that hotel has the hotel activity, right, and then for the spa, for the swimming pool, for the gym, those would require the health hazardous business license. So in this case, in checking the target, you need to also check what activities and what service that the hotel offer as well, in order to confirm whether they have sufficient health hazardous business license. So if they have restaurant, for instance, restaurant also need the health hazardous business license. And for the food distribution and storage license, this also will be required in case that hotel has like a restaurant or the room service, for instance. This would require the food distribution and storage license. And the health business establishment license is required for the spa. If they have the spa, they also need the health business establishment license. And also, if they sell liquor or sell the tobacco, this would be required to obtain for the relevant excise office at the relevant location. And if that hotel also have the money changer, currency changer center, that hotel also need the authorized money changer license from the Bank of Thailand. And if that hotel has travel agency business, they also need the travel agency business license. So basically, they would need you would need to check whether what type of service or what type of the activity that the target hotel have, and then confirm whether they have obtained the relevant sufficient license in accordance with the applicable law. And also other issue that needs to be checked when confirming the due diligence, such as whether they have the financing agreement, whether they have like a financial covenants in those financing agreement, whether they have breached any other material agreement, for instance, any agreement with the supplier, whether agreement with the franchisor or something like that. Is there any covenants that they may not be able to do, or some general provisions such as change of control? Other issue in this case is like whether they have the sufficient insurance for the hotel, whether there are any litigations, whether someone has sued them, especially the employees, whether there are any employees dispute, or whether someone has sued them for bankruptcy or rehabilitation. Those would have to be those would be impacted on the due diligence. This can be done by the independent litigation search in the relevant court where the hotel is situated. Yes. Okay, and we come to the important issues on the employees management. because we see that during the COVID time, there may be issues for the hotel in relation to the management with the employees, such as they may have to lay off their employees. So this has to be checked whether the hotel has issued correct in termination notice to the employees, whether they are paying correct amount of the severance pay, and whether they are paying correct amount of the compensation to the terminated employees. And currently, the government has issued the law on the temporary cease of the business operation, because many business in Thailand have been impacted by the COVID-19, and there are many issues that they have to look to close the business, the hotel as well. For the hotel that has been closed in accordance with the government order, I think I understand that last year there is the government order to close the hotels, right? So in that case, the employer, the hotel, the operator does not have to pay the wages to the employee, but then the employee can get the compensation from the government of 50% of the daily wage. In the second case is that if there is a closure or cease of business due to the business being affected by the COVID-19, and they have received the permission, in that case, the employer still has to pay 75% of the wages to the employee, but this may not be used very often, because then the employer still has to pay the employee for 75%. For the third case is the cease of business without any permission and due to no reasonable ground. In that case, the employer still has to pay the full wages to the employees. So and the fourth issue is the case where the employee is unable to work because they are being have to do the quarantine. In that case, the government consider that this is a force majeure case, and the employer does not have to pay the employee, but then the employee can still get the compensation with the government of 50% of the daily wages. So these are the four cases on the seizure, on the closure of the business, that the government has certain measure into that. And then we come into if the hotel or the operator has asked the employees to reduce the salary or reduce the working hour, or we see that many hotels, because they have laid off many employees, right? So from 5 jobs of 5 people, they ask one person to do 5 jobs. So that in that case, normally what we have seen is that the hotel may just put the announcement to the employee, but legally, actually, if that's the case, the written consent of the employee would be required, because you are changing the condition of the work with the employees. And if there are any reduction of salary, reduction of working hour, and then you reduce their salary, in that case, the written consent of the employee is also required. And if any reduction of the welfare of the employee, such as you used to give like dental compensation to the employee, and then you don't give anymore, in that case, the written consent is also still required. So that would be the checking if you are going to acquire the hotel, because if the employee does not give any consent, that would be the risk that you may face if the employees would be suing the hotel, or may be under the dispute with the operator. That would be the legal issue that we would want to discuss today.
Thank you very much, Kun Bunyapon. That was really helpful. And And if I may attempt to summarize, I think for any investors, either foreign or domestic, there's a number of issues and complexities that they're going to need to be looking at. Obviously, first of all, will be the financial viability of the business, which is related to some of the things Ian discussed, and also getting the right price. But I think even once you get over those hurdles, as you've outlined there from a legal perspective, there's a lot of things that the businesses will need to consider. So thank you very much, Khun Bunyapon. So we've got just under 10 minutes left now. So we'll go into a quick Q&A. So just a reminder to the audience, please do put questions in the chat. We've already got a few that have come in. So maybe if I can start, maybe to Ian first. A question we have is, where do we expect the investors to come from in next year? Do we expect there to be a lot of domestic investors or foreign investors? Could you share your views on that, please?
Yeah, that's a very good question. I think the answer is it's going to be a mix. I think the fact that the borders are opening and it's now easy to come into Thailand with just one night in a hotel and a test and go. We're already hearing from a lot of our clients who are already in the country or booking flights to come and visit with a view to looking at potential deals. So we know that especially on the funds, they have there's an unprecedented amount of funds that have been raised globally that's still waiting to be deployed on private equity investments. So the fact that the borders are open now means that we'll see a lot more foreign investors able to transact here. Having said that, there are several local businesses who will be still looking to do deals, but I think the fact that they're now having to compete a lot more with sort of more foreign investors coming in means that we'll see more competitive tension, therefore again helping decrease that valuation gap and seeing more deals being completed.
Thanks, Ian. And maybe another question, maybe looking further afield while we're in the international arena, a question from the audience. Do we have any views on opportunities in other countries in Southeast Asia? Obviously, I know we predominantly focus on Thailand, but I know Ian Khun Bunyapon, we often work with outbound investment as well. Ian, maybe to you again, have you got any views on the rest of Southeast Asia, whether that similar opportunities exist?
Yeah, I mean, obviously, most of the detail knowledge is here in Thailand, but we do speak with Thai investors outbound, and we speak with our colleagues in KPMG and all the other countries in the region where we work together on projects. And I think my understanding is that actually across most of sort of ASEAN, countries like Malaysia, Indonesia, Vietnam, especially, I think the situation is quite similar to Thailand. Similarly, that banks have been supporting, so we haven't seen a huge amount of rehabilitations or failures, but at some point some investment will be needed. So I do believe it's quite a similar situation where as countries open up, and it's all going to be at different paces, with Thailand just opening up with this current scheme, then we will see more opportunities for M&A in those countries as well, because they have exactly the same sort of systemic issues as Thai hotels, and obviously the foreign investment rules differ between each country, and that needs to be navigated. But I think a lot of the other trends are quite similar to what we're seeing here in Thailand.
Great, thanks, Ian. That's really helpful. Maybe Khun Bunyapon, a question for you we have here from the audience is about the foreign business licenses. So obviously you talked a lot in detail about the licenses required to run the hotel. What about from a foreigner perspective in terms of other related businesses such as restaurants? Are there other licenses required for foreign investors there?
Yeah, so for the Thai authority to give foreign business license to foreigner, they have to think whether the foreigner come to compete that type of activity with Thai people, right? So restaurant for Thailand, we are the kitchen of the world. So I think normally the Thai authority do not do not tend to give FBL for foreigner. We have only seen one case that they grant the restaurant foreign business license for restaurant is the IKEA restaurant in their shop, because that is a very rare case, because they have to have that restaurant to conjunct with their shop. So that would only be the only one case that we have seen. So in conclusion, for foreigners to obtain foreign business license for restaurant is very unlikely. Yeah.
Okay, thanks, Kumbunipan. So another aspect that foreign investors need to look out for, if there's a hotel with maybe a very successful restaurant, they need to be considering that. And we have another question around the asset warehousing scheme from the government, and whether we've seen many deals within the hotel space around that. Maybe Ian, I'll start with my response on that as a sort of head of restructuring here, and you can add. But I think, look, whilst obviously we don't have visibility of every single transaction and negotiation that's going on, I think it's fair to say we do see this being used. Many of the banks now, they've allowed moratoriums for a long period of time, typically until the end of this year, when I think, as Ian said earlier, originally everyone was hoping by now everything would be back to normal and into 2022. But look, we are seeing some activity, some deals being done there where banks are approaching borrowers, asking about their assets and seeing if there's a way that they can use the asset warehousing scheme to give the banks some temporary comfort that they've got some collateral and the debt has decreased, and allow the hotel operators a bit more time to recover. Ian, feel free to add anything to that answer if you would like.
No, not much more. I think it's just in line with the likelihood of seeing more M&A. I think it's businesses can't just carry on as they have been doing the last 18 months without taking action. Some kind of action needs to happen because the banks need to deal with the borrowers that they have at some point, and that may well result in things like asset warehousing scheme. It may well result in joint ventures, M&As, funding, fundraising, etc. So there are several different options, but I think that what's clear is that we can't go for several more months without some kind of action taking place.
Thanks, Ian. And maybe a last, but maybe more difficult question, Ian, to ask. We've talked a lot about valuation, and that actually links to the asset warehousing scheme, where a value of that property needs to be agreed, a value of the business sometimes needs to be considered. I mean, I know there's no straightforward answer, but how are we looking at? How are you looking at it? How are investors looking at it in terms of valuing their business in the massive uncertainty we're facing?
Yeah, that's the many billion-dollar question, I think, at the moment. And yeah, I think, and that is really a challenge at the moment, not just in hotels, in other businesses, but I think especially in hotels and in Thailand, which is an economy which is so reliant on tourism. I mean, go back pre-COVID times, the standard way that you would look at a valuation of a hotel business would be to look at comparable transactions, so other recent transactions, and see what level they were sold for. And that would be a useful benchmark. And then the other one would be to look at a discounted cash flow based on future projections. And unfortunately, both of those things are very, very, very difficult to do right now, because there's been very few deals during the COVID period. So you don't have any real true comparison. A 2019 deal isn't comparable to a deal that's being done now. And then looking at forecasts and projections, there's always uncertainty, but in the current environment, there's massive uncertainty around whether tourist numbers can be 1 million, 2 million, 5 million, 20 million, or 40 million like it was 2 years ago. So, and I think that's the point that I made there when I was speaking, is in order to bridge that gap and that uncertainty on both sides, I think we need to see some more flexible deal structures around deferring some portion of the purchase price, so that both the owner and the seller and the buyer can feel comfortable that they're both getting a fair deal.
Thanks, Ian. A good answer there to a difficult question. So look, we're at the hour now. Thank you everyone for joining. Thank you, Ian. Thank you, Kumbunipan. I think I'll just close by saying that we really do believe there'll be some more activity to support some of these hotel businesses and some great opportunities for investors to come in and support those businesses and the Thai economy. So whether you're a seller or an investor, please do reach out to our team, myself, Ian or Kumbunyapon. We've got lots of experience and we're happy to help you if we can. But thank you all for joining and have a great rest of the afternoon.
Thank you.
Thank you, everybody.